And it is the end of the trading day on Wall Street. It was a relatively flat day for U.S. stocks. The Dow Jones ended up around 150 points. The Nasdaq and S&P ended the day just slightly within the green. They each rose by around 0.5%. Joining us now is Hope King. She's a business reporter for Axios. Hope, welcome. Great to have you with us. So what drove the U.S. markets today?
Yeah, it's great to be back as always. And I think what you're seeing is an adjustment with investor attitudes. We know that over the last couple of months, there has been a lot of whiplash in the markets. And so right now you're seeing investors kind of used to bad news. And so if there is a little bit of bad news, it's sort of already baked in. And if there is good news, it's largely still being tempered by concerns that the economy is slowing down too much. So we're seeing sort of an evening out right now of, I think, investor sentiment.
All right. And Hope, oil prices did plunge today after China's central bank cut interest rates. Why was that action taken? And was it so unexpected?
It was unexpected because the authorities and the regulators and the policymakers in China have largely signaled to the world they have things under control. But, you know, I name all of those bodies inside of China because they are all facing a lot of challenges. If you're looking at the housing crisis, people are not paying their mortgages. If you're looking at the data that came out this morning, industrial data, retail data, all of these things are slowing down. And so you're seeing policymakers get a little bit nervous. And so they're cutting these interest rates in an effort to reinvigorate the economy because it has slowed down so much. The last thing I want to mention, of course, the regulation that we've been seeing across these companies has been a big factor in the slowdown as well. Companies not really knowing where regulation is going to go. So all these factors intertwined together has caused the economy to slow down, consumers to feel really badly. And because China is the second largest economy in the world, when you see slowdown there, you see then demand for oil potentially going down. And that's why you're seeing those prices fall.
Wait, so can we step back and dive into a little bit more the causes of China's economic slowdown, sort of what's driving it? You say there's unclear regulation going on for a lot of companies. Why is that? Why is that happening? And number two, I didn't hear you mention COVID. Is that also one of the reasons?
It absolutely is. And I think it's one of those things that maybe here in the U.S. we've seen it wane, but certainly in China, they still have their zero COVID policy first. So I'll go into that first. One of the things that you saw over the last couple of months, these policies have restricted movement in huge cities like Shanghai. So when you look at a retail sales number coming out of China today slowing down, well, it makes sense when you think about the fact that people couldn't get out to go shopping. The regulation that I mentioned, this has been going on now for almost 2 years, the better part of 2 years. And what regulators in China are looking at are big tech companies like Baidu, like Tencent, these companies that have access to a lot of consumer data, and they want to regulate how that data is being used. Now, just like here in the U.S., when there is ever uncertainty around regulation, companies are kind of shying away from growing, making new changes, and investors also get very skittish. So you're seeing that pull back as well from the investor side. So at the moment, China is facing a number of problems on many fronts. And so the economy slowing down sort of as a result of that has gotten the government much more nervous. And that's why they took this unexpected cut today in interest rates, although a lot of people think that it's too small to maybe make a difference.
Interesting headwinds. And of course, we know anytime the economy of China slows down, that has massive global repercussions. All right. Well, Hope King from Axios, thank you so much for joining us. We appreciate your insight.
Thank you.